Imagine you are a farmer in Mesopotamia. About 5,000 years ago. You have had a good harvest. Hundreds of kilos of barley. More than your family can eat in a year. You have a problem. Barley rots. Mice eat it. Neighbors steal it. Your storage shed is a mud hut with a door that does not close properly. But at the end of the street there is a massive building. Thick walls. Armed guards. Priests who keep track of everything that enters and leaves. It is the temple. And the temple offers you a deal. Leave your barley here. We will guard it. When you need it, come and we will return it. In the meantime, it is protected by the gods. That deal, 5,000 years ago, was the first banking act in history. There were no coins. No banknotes. No interest rates. But there was something you would recognize instantly, someone guarding your things and promising they will be there when you need them. Banking did not start in a glass skyscraper. It started in a mud brick temple. Welcome to Season 3 of Everything Has a Price. The banking system. In the first 2 seasons we built the foundations. We saw how money was born, from barter to shells, electrum coins, and banknotes. We saw what functions it serves, what types exist, why we trust it. And we ended with a question: if money is formalized trust, who manages it? The answer is banks. But not the banks you know. Not yet. In this season we are going to open the black box of the banking system. From the first grain deposits to the Federal Reserve. From goldsmith receipts to the creation of money from nothing. And we start at the very beginning. Literally. With the temples of Mesopotamia and Greece. Where the idea was born that someone can guard your wealth and, in exchange, provide a service. Mesopotamia, between the Tigris and Euphrates rivers. What is now Iraq? About 5,000 years ago, Sumerian cities like Uruk, and Nippur were centers of civilization. And at the center of every city was a temple. Temples were not just places of worship. They were the economic heart of the community. They had something nobody else had: thick walls, guards, and above all, accounting. The priests kept records on clay tablets. Every grain deposit, every silver delivery, every loan was noted. How much? From whom? When? It is the oldest accounting we know of. What did they store? Mainly grain, barley, and wheat. But also silver, livestock, even legal documents. The temple functioned as warehouse, notary, and safe, all in one. And here is the interesting part. The temples did not just store. They also lent. If a farmer needed seeds to plant, the temple lent them. When the harvest came, the farmer returned what was borrowed, plus extra. That, in essence, is a loan with interest. 5,000 years ago. The Code of Hammurabi, written around 1750 BCE, already regulated these operations. It set limits on the interest that could be charged. It fixed penalties for non-payment. Meaning, banking was so developed that it already needed laws. Think about that. Before coins existed, which would not appear until the 7th century BCE in Lydia, as we saw in Season 1, banking already existed. Deposits. Loans. Records. Regulation. Banking is older than money. Let us fast forward about 2,500 years. Classical Greece. The Greeks had a problem similar to the Mesopotamians. Where do you keep your wealth? Your home is not safe. Thieves, fires, wars. Everything threatens your savings. The solution was the same: temples. The Temple of Artemis at Ephesus, one of the 7 wonders of the ancient world, functioned as a kind of international vault. Entire cities deposited their gold and silver reserves there. Why? Because robbing a temple was sacrilege. The gods would punish you. Or at least, that is what people believed. And that belief was more effective than any lock. The sanctuary at Delphi did the same. And the one at Delos. These temples accumulated enormous quantities of precious metals. Not because the priests were bankers, but because they were the only ones who offered credible security. Notice the key word: trust. The same word that sustains the entire monetary system, as we saw in Season 2. But here the trust does not come from a government or a law. It comes from the gods. From the shared belief that the temple is inviolable. It is a pattern that repeats throughout the entire history of banking. Banking works when people trust that their money is safe. It does not matter whether the trust comes from the gods, from a king, from a law, or from a deposit insurance fund. The mechanism is the same. But Greece gave us something more. Something the temples did not offer. Professional bankers. They were called trapetitai. The word comes from trapeza, meaning table. Because they literally worked behind a table in the agora, the public marketplace of Athens. They appeared around the 5th century BCE. At first, their job was simple: changing coins. Every Greek city-state minted its own currency. If you came from Corinth to do business in Athens, you needed to change your Corinthian coins for Athenian drachmas. The Tripetitai made the exchange and charged a commission. But soon they expanded their services. They began accepting deposits, paying interest on those deposits, making loans to merchants, to ship owners, even to cities. Ordinary loans charged interest of about 12% annually. Maritime loans, riskier because the ship might sink, charged much more. They also acted as notaries, verified the authenticity of coins, and stored valuables. They were, in everything but name, bankers. One of the most famous was Paetion of Athens, a former slave who became the wealthiest banker in the city. His story is fascinating. He started as an employee at a money-changing table, won his freedom, and ended up so rich and influential that he was granted Athenian citizenship, an extraordinary honor for a foreigner. The Tripetitai show us something important. Banking does not need a temple. It does not need the protection of the gods. It can work as a private business, based on personal reputation and market trust. But they also show us the risks. When a trapezida made bad investments or lent too much, he went bankrupt. And his depositors lost everything. There was no safety net. No guarantee fund. If you trusted the wrong banker, tough luck. The Romans, as in so many other things, took what the Greeks had invented and organized it on a grand scale. Roman bankers were called argentarii. They operated in the Forum, the commercial and political center of Rome. They accepted deposits, made loans, exchanged currency, and, most importantly, kept detailed records of all transactions. But the truly new thing was the legal framework. Roman law developed concepts we still use today. The regular deposit: you store something and it is returned to you exactly as it was. The irregular deposit: you deposit a quantity of money and the banker can use it as long as he returns the same amount when you ask. That distinction between holding and lending is fundamental. And the Romans formalized it. They also created transfer mechanisms. If you owed money to someone and both of you had an account with the same argentarius, the banker simply subtracted from your account and added to the other person's, without moving a single coin. It is, in essence, a bank transfer. 2,000 years ago, the Roman Empire spread these practices across the entire Mediterranean. But when the empire fell, much of this system was lost. Western Europe entered the early Middle Ages with a fragmented, localized, and primitive banking system. It would take centuries to recover what Rome had built. And those who recovered it were, surprisingly, warrior monks. Let us go back to the Mesopotamian farmer from the beginning. That farmer had a real problem. His wealth was perishable. If he could not store it securely, he was condemned to live hand to mouth. He could not save. He could not plan. He could not invest in improving his field, because any surplus rotted or was stolen. The temple gave him something that goes far beyond a warehouse. It gave him the ability to think about the future, to plan, to accumulate. And that is exactly what a bank does today. When you deposit your paycheck in a checking account, you are doing the same thing as that farmer. You are entrusting your wealth to an institution that promises to return it when you need it. The difference is that today, if the bank goes under, there is probably a guarantee fund that protects you. That farmer was not so lucky. His only protection was the word of a priest and the supposed wrath of the gods. That vulnerability, trusting your wealth to another without absolute guarantee, is the foundational problem of banking. It has gone 5,000 years without being fully solved. And as we will see this season, the attempts to solve it have shaped the financial system we know. 5 key ideas from this episode. First, banking is older than money. Mesopotamian temples accepted deposits of grain and silver thousands of years before the first coins were minted. Second, temples functioned as protobanks because they offered something nobody else could: credible security. Thick walls helped, but the real protection was the belief that robbing a temple was sacrilege. Third, in Greece, the Tripetitai created professional banking. They exchanged coins, accepted deposits, made loans, and charged interest. They were bankers in everything but name. Fourth, Rome institutionalized banking with a legal framework that distinguished between regular and irregular deposits, and created transfer mechanisms that anticipated modern banking. Fifth, the thread running through the entire story is trust. Whether in the gods, in a banker's reputation, or in an empire's laws, banking only works when people believe their wealth is safe. The temples of the ancient world guarded treasures. The Greek Tripetitai invented private banking. Rome turned it into a system. But when the empire fell, all of it was lost for centuries. Europe was left fragmented, without safe roads, without banking institutions, without institutional trust. Until, in the heart of the Middle Ages, a military order discovered something revolutionary. They could not only guard other people's gold, they could move it from one country to another without anyone touching it. They could make you deposit in Paris and withdraw in Jerusalem. God, gold, and the Templars. That is what comes next.